In this lesson, we're going to look at Universal Social Charge, or USC. In the last lesson, we looked at PRSI, how to calculate PRSI and what PRSI stands for. So in this lesson, we're going to similarly do the same, but this time with Universal Social Charge. It's a bit trickier to calculate in that there will be three different rates, and I'll show you an example in a moment. So again, it's a direct tax, like any of the taxes for income. So it's going to be calculated, as I said, on a person's earnings. And some people, if they don't earn enough, they don't have to pay USC. So it's on incomes greater than 13,000. Okay. The Universal Social Charge replaced both the income levy and the health levy in 2011. So it's a new enough tax that came in during the recession. So plans to merge the USC and PRSI were suggested by Fine Gael, when they were looking at the USC and how to get rid of it. But then the revenue and the government decided to keep it anyway. And use it for society to invest in public expenditure for housing and so on. Okay. Now it has been reduced in the last couple of budgets, so eventually, hopefully, it'll be phased out. So we'll see what happens. USC rates range from 0.5% to 8%, depending on your earnings. Okay. So here's an example here. So Lisa Small, who earns 45,000 a year, pays the following USC. So on the first 12,012 euro, okay, that's on the lower rate, 0.5%. So just to note, you do that calculation first on that 12,1200. So remember, she earns 45,000, so she's a lot more still to be taxed on the two other levels. Okay, so the 2% then will be on the next 7,860. So you pretty much just get 2% of 7,862 even. Okay, and then whatever's left over, so when you add the 12,012 euro to the 7,862, take that away then from the 45,000. All right, so the balance here will be 25,126, and that's at a higher rate then. So as we said before, progressive taxation will be on, higher income earners pay more. And even as we saw there, USC is not even paid for certain people that don't earn enough. Okay, so up to 13,000. All right, so the total there for that person would be in USC alone would be 1,347 euro and 97 cents. Okay, so that's for the year. It's a lot of money. I suppose if it's divided up monthly or weekly, it doesn't seem as bad. Okay, so an example here, I want you to try yourself. I'll run through it with you even. Paul earns 61,000 a year and pays the following USC again, so 0.5 on the first 12,012 euro, 2% on the next 7,862, and 4.5% on the balance. Okay, so you have to add up the three of them then to find out the USC liability. Another question here then. So Paul has been offered a new job with a salary of 71,000. So advise Paul on how this will affect his USC liability. So he was earning 61, now earns 71. Okay. Now remember, the more you earn, the more you pay. So obviously there's going to be more now for that 4.5%. So do the calculation again. Advise then, is it worthwhile? How much more would he be paying in taxes for that extra 10,000? And then factor in things like, would the job be, even though it's been paying more tax, and also, have to balance up other things, the hours that we don't know, but maybe there might be more hours for more responsibility. Okay, so submit your answers again.